52, 42, 34, 26, and then 12. Pivot 62, support 52, 42, 34, 26, and then 12. Resistance on the upside at 72, 80, 89, 4,000, and then 11. All right, the market here absorbing yesterday's sell-off of the CPI number. This morning, we had the PPI number, which is a wholesale segment of inflation, and those came in kind of where expected. I mean, we really didn't miss yesterday, but I think the market was really with the rally over the last 4 week or so. They were expecting it to be beat the lowest end of the expectations, and they didn't. This morning, PPI expecting minus 0.1 came in at minus 0.1. The core, however, expectation of plus 0.3 came out at plus 0.4. Year to year, they were expecting 8.8, came out at 8.7. But the core year to year again was expecting 7, came out at 7.3. So wholesale inflation numbers a little bit more moderate and within line, a little bit kind of mixed. Some within expectation, and then some a little bit more. With the year to year is a little bit more. So it's a mixed bag, but not. I think they kind of discounted those numbers a little bit after yesterday's miss. All right. Again, welcome some of the new folks that are here. We're trading mini S&Ps, looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur. Good morning there, Mauricio. Well, we're going to put up the levels here in a minute as the market kind of gyrates here between wait a minute. My charts are way off here. But then again, yeah, we're trading these. Yeah. Okay, my charts are off. We are trading at 59, and the file finally charts are catching up here a little bit. Charts are a little slow this morning. Don't ask me why. Okay. Yeah, my charts are slow. I know they're lagging. I don't know. Okay, so we're just kind of back here at our pivot after drifting down to the 57 area, and then coming back up here down to our pivot. So if you're a little bit, if you're watching my chart, they're a little bit slow. I don't know why. The ladder ticket obviously is going a little bit faster. Or maybe my ladder ticket's off. I don't know what. It's trading at 57.5 right now. Is that what you guys have? 57, 56 there. I don't know why my charts are trailing big time. There's really not that much volume going on. We've seen it a lot worse. All right, there. I mean, if you look at for those of you who might have just jumped in, if you look at the chat box, you'll see the levels that we just gave out. Again, they're a guide to the day, right? And we can tweak those, we can add to those, we can subtract from them. They're only there to give us a guideline to the day. And again, the market yesterday, off of the big time miss, created a little bit of volatility here with CPI. With the CPI number, the PPI number today was a lot more in line. All right, again, our charts are a little lagging. We're coming down here to the 52 area. Got right down there to 52.25. And working this little 52 area. We're probably back at around 3 to 4 points here with our targets, I think. Things have calmed down quite a bit, even though you can't tell right now because my charts are off. But hey, all right, there's a little push down here to the downside. So be whatever you do, make sure you keep your stops in place. Come down here to the settlement price here at 50.25. All right, coming back up here to the 52 area. Again, keep your stops in place no matter what. That 50 area was a little bit of a backup area for us. So again, make sure you keep your stops in place. And we just never know when we're going to get some volatility. As you can see here, it's trading both sides of our blue band. So for the time being, it's getting a little bit choppy. And it's a big overnight range here, a little bit over the last few hours. But so just be mindful of that and just keep your stops in place. All right. And your scaling in also has got to be, appropriate with the volatility. So that is also a consideration. We're just kind of hanging here on that the settlement price there at 50. And now coming back up here to 52. So again, if you scaled in, maybe you got in a little bit better and just managing your trade a little bit here. All right, nice little rotation there off of that 52 area. Again, the settlement price should give you a little bit of a backup there.
Hey, Sal, it might be me, but are your charts frozen?
Let me see. Yeah, they are. Now they are. Now they're not, but they're slow. I don't think they're catching up, but they're a little bit slow. I don't know why. They're good now.
Okay.
Well, I didn't. Yeah, I didn't know they were just frozen.
No problem. Thank you.
All right, pushing back up here now, coming back up here to our pivot area. And Well, the next level on the upside is the 72 area. Again, this is a big overnight range. It's trading on both sides of our blue band, so it's kind of maybe kind of consolidating here a little bit at these lower levels to see where we're going to go next. Can we repeat the levels again in the chat, please? We'll get the levels up there, and there we go. All right, you can see we're chopping around. Did go right up to our pivot area there and rotated off of that. So if you were a little bit aggressive, maybe you took a little opportunity against our pivot area. All right, so nice little rotation there against our pivot area if you were a little bit aggressive. And came back down here a little bit. All right, again, market a little bit whippy. Let's see if there's any numbers coming out this morning. We have the PPI number, like I said, already came out, and be a little bit careful here around the pivot area this time around because we already tested it. Got up to 60 and change, 61 and change before, so be a little bit mindful here. If you're going to take it, just keep a tight stop. We have PPI already came out. We talked about the numbers and what they were. Also, we have Atlanta Fed business inflation expectation. That should be an interesting one, but that's coming out at 9 o'clock. Not usually a big market mover, but we'll see what they want to say. So that's coming out here at 9 o'clock. The Atlanta Fed business inflation expectation situation. All right, now we continue looking for the 72 area next. That's our next level of resistance that we have up here. We got right up to 70 area there. So 69 and change. We have 72. All right, quickly rotating back up here. Again, giving you choices here. Got right up to 74, 74 and change up there, 75 actually. Really quick pop up there. Now coming back down here again. All right, nice little rotation here against it again. The 74 backup was the 72. The backup was a 74. Kind of got up to 75 and then rotated off. So nice little quick rotation there against our level. Again, scaling in does help, and with the volatility, you're probably doing 1.5 or so, maybe 2 points even against a level. And again, nice little rotation here off of that area. All right, nice rotation there against that area of resistance up there, the 72 area. All right, nice little quick rotation there. Hopefully some of you were able to jump in. Again, the um, ability to scale in keeps you in the game a little bit there. And especially when we are trading up against the with the volatility that's there, you have to consider that. The scaling does keep you in the game a little bit there. And we come all the way down here to the 62. Good place to cover if you are short. All right, nice rotation there against our 72 area above. All right, nice little rotation. We suggested covering your shorts there around the uh, 62 area there, and nice little rotation off of that. All right, again, volatility here. And they push right off of that 672 area very quickly, and I keep pushing it with a little bit of pressure here, coming right down to our blue band. Hey, Philip, I hope you're back and can hear us okay. Nice rotation there against our blue band area. At least we are moving around here a little bit and giving us opportunities to scout the market off of the concepts and ideas that we teach in our education course. We explain to you why these levels would work and why we would try to do them, use them, I should say. There you go, Don. Nice little rotation there. Nice entry point there against our blue band. We suggested coming right down to it. Hopefully you were able to jump in. Again, we had a quick scalp against our pivot area there, and then now we rotated back down here to our blue band, and that was another quick scalping opportunity. We've had easily about four for sure, five, probably maybe six even trades this morning. Again, we never know when the markets are going to give us those opportunities. All we can do is be patient and wait for them. Yesterday, obviously, we were busy. We like to average about 4 to 5 trades a day. And obviously, the word is average here. Yesterday, obviously, a lot more. Today, obviously, already we've gotten, a lot more than that. And but the key word is average. The week before, when the market was slowly rallying, we had to be very patient. And we talked about showing some patience in uh, picking your spots and waiting for the opportunities to present themselves. All right, back here at our pivot, kind of a little neutral right now. After getting some nice opportunities there against our levels and price action areas that we focus in on. We do have a number coming out here in about 3 minutes. So Atlanta Fed index or whatever that is that they come out with. So we'll see what that's going to bring to the market. Again, we've been very, very busy this morning. Uh, again, if anything, any of this stuff interests you or you want to learn more about our education course, let us know. Just ask in the chat and we'll get back to you about it. Again, these areas that we are looking at, we focus in on, and we explain why we're looking at them and how they would be a reason for you to enter into a trade one way or the other, whether you're long or short, and take advantage of ebbs and flows in the market. And that's what we're trying to do here. So kind of a low risk type of trading. And also we focus in on the morning hours. We feel that the morning dynamics helps us with our opportunities and our methodology. Traders are hoping for some calm after the worst day in the market since the steep and pandemic-driven volatility seen in 2020. The Dow plunging nearly 1,300 points on Tuesday, leaving the index down 14% for the year, while the benchmark S&P 500 and tech-heavy Nasdaq tanked 4.3% and 5.2% respectively, leaving them off 17 and 26% year to date. The broad sell-off accelerated in the afternoon in a force some attribute to the outsized options activity, pulling every asset class deep into the negative territory from stocks and oil to crypto and gold. All right, we're right here at our pivot, so a little neutral. We have a number coming out here in about 2 minutes. There were hopes that inflation would come in weaker than expected, meaning the Fed could eventually ease up on the quantitative tightening cycle. But by the way things are looking now, it's doubling down on the aggressiveness. CPI rose 8.3% versus the 8.1% consensus, while the core CPI, which strips away volatile food and energy, rose more than expected, 6.3% from the 5.9% in July. They were expecting 6.2%. That despite the gas prices have come down tremendously over the past 13 weeks, suggesting that price pressures are seeping into more parts of the economy like housing, college tuition. How much more could that shit go up? And medical services. I mean, college is getting ridiculous. All right, range bound here. So we'll see. We have a number coming out here in a minute. The inflation report is one of the last that the Feds will see before the September meeting next week, but it did enough damage to already worsen policy expectations. According to CME Fed Watch, there is now a 1 in 3 chance that the Fed will raise by a monster 1 percentage point, or otherwise 33%, while the probability of a half percent point fell to 0, meaning that 75 points is a given. If that's the case, a full-fledged recession could be around the corner, with rapidly rising borrowing costs pushing any prospects of a soft landing off the table. Well, I mean, that's been off the table for a while, but whatever, especially since they're going to keep rising. Today's data, you're right, they've never made any sense. I totally agree with you. Never made any sense. All right, we have this number coming out right now. Let's see what it wants to do. I don't know. Just because there's an inflation tag to it might create some volatility, but who knows? Numbers out. We'll see what happens. Again, we already used the 72. We got right up there to 72, 1 and change there and rotated off. But we already used the 72, so we're not really touching that one anymore. We're looking at the 80 on the upside as our next area to focus in on. Okay, just kind of just bouncing around here, really not reacting to that number at all. Upside or downside, they're done. I mean, I'm not surprised one way or the other. So we'll see what happens there. Um, so again, the numbers were not really good. So now we have a problem might be coming up. As mentioned earlier this week, another inflation threat is in the works with the Western styles showdown threatening the U.S. economy. A duel between 60,000 rail workers, their unions, and some of the largest U.S. railroad operators is already having an impact, but the worst is yet to come. At 12 a.m. Friday, so Thursday night, right? Um, Friday's deadline to agree on a new work terms hang in the balance, with the gunslinging likely to cost the nation $2 billion in economic output per day if things go off the rails. Haha. They're starting to talk about it more right now, so that this is becoming more of a possibility. There are already reports of railways stopping to take grain and animal feed shipments, while most of them have already put a halt to ammonia, fertilizer, and hazardous items to ensure that the sensitive cargo is not left unsecure. Other raw material deliveries are also facing uncertainty, like coal transports that could be interrupted ahead of the pre-winter stocking, which could substantially trigger an increase in gas power demand. By some estimates, the railroads in the United States impact about a third to about 45% of all freight in the United States, meaning there could be knock-on effect for many industries. I can't believe they're even letting you get to this point. These people cannot afford to have another problem like this. Almost all ethanol is moved via rail and is produced in the Midwest, said some guy who follows that stuff. There is no easy substitute for rail, and the United States government will have to make some decisions around blended targets if ethanol movement is demand centers are constrained due to the strike. Ethanol currently accounts for about 10% of U.S. gas volume. Prices for the commodity has already been on the rise for several marketplaces, with sellers facing interruptions. The current dispute goes back 3 years and mainly centers around pay hikes, sick leave, and time off policy. In July, the Biden administration intervened to avert a strike, naming a panel of arbitrators to mediate the contract dispute. But two remaining holdouts, the Brotherhood of Locomotive Engineers and Trainmen and the International Association for Sheet Metal, Air, Rail, and Transportation Workers, account for over half of the rail labor force. As we come quickly back down here to our blue band area. Again, we already took it a couple times, so be a little bit careful if you're going to take it. It's also our pivot, so very aggressive if you're going to take it. The Biden administration is now speaking with truckers and air freight companies to assess alternative modes of transportation. But if things get really bad, Congress may be forced to impose contractual terms and send the dispute to force arbitration. Emergency powers could also be used by the White House to deliver of certain materials. And let's figure it out already. I mean, this is kind of stupid. Can't have such a dramatic effect on the economy and not deal with it. Idiots. Sometimes I don't understand how these people work. Okay, again, we're down here at the blue band pivot area again, but like I said, it's been the third time down here, so be a little bit careful if you're going to take it. May trade a little bit smaller if you're going to take it. If not, then just wait. Where support down the downside is down at the, well, we already tested the 52, so we're looking at 42. So yeah, they got that. That's going to be another next push down in the equity markets if they go on strike, especially if it lasts oh, anything more than a week or two. A week for sure. I mean, not only is it affecting transportation of goods and services or goods or whatever, it's also affecting, like they were talking in Chicago here, that the transportation into the city by some of the some of the rails might be affected because some of these railroads are owned by these companies and they're going on strike, so they can't use those rails, even though they're moving customers, or not customers, but everyday work people. So it's bleeding into other areas as well. So, all right. So again, we suggested that little area there, but it had to be, had to trade it small because it was riskier. And what we do in our education course, we try to explain the risk involved and why you would take a trade and why you wouldn't. So, but then also everybody trades differently. And so for those who wanted to take the trade, you just had to take it, but maybe lighten up the load a little bit, maybe not put 3 or 4 contracts in or 5, maybe just 1 or 2, something like that. And if you're trading ones, then that's fine, just wait. Again, everybody has different risk tolerances. You could trade the one lots and find all these areas and take them anyway. All depends on what your risk tolerances are. Everybody trades a little bit differently, so keep that in mind. All right, nice little pop there against the blue band and our pivot area. Did get down to 59 and change there. So if you did take the pivot, obviously you had to back it up with the blue band. All right, again, a little range bound here, as you can see. All right, again, just kind of drifting back here to our pivot. We're trading just kind of back and forth here. Trying to find areas to consolidate here a little bit. Again, obviously, there are outside influences that could affect the market. Yesterday's fundamental news, remember, I always said that fundamental news could take um, over the technicals when the news comes initially out. And then the technicals, after things calm down, do come back into play. And take over. So yesterday's day, as far as the trading was concerned, was reacting to the fundamentals. So obviously, the debt kind of took over the situation, and the fundamentals played a big role. All right, just bouncing around here. Yeah, going back down here to the lower end of this range. Again, be a little bit careful this time around. Been here a few times, so all right. It's definitely liking this little area down there. All right, it keeps bouncing off of it. We are range bound, and if you're going to take that, we suggest always making sure you keep it a little tighter stop. All right, it's just range bound here. So gonna go nowhere fast. Our numbers, the way we're looking for already came out. We've had some nice opportunities this morning. Again, if anybody has any questions, feel free to ask in the chat. Anything that we do, why we are calling some of the trades that we're calling out, we try to explain them to you. But we do have an education course that helps explain everything here, that what you're looking for. Our goal of our course is to be able for you to do this independently of myself or anybody, looking at the technical analysis that we do and understanding why it would work. Can you take some of the same concepts and use them in other markets? I think you can. It just depends on the volatility of those markets. Obviously, the concepts and ideas that we teach work well for the S&Ps because there's a lot of volume and volatility here. And but it doesn't mean that they can't. Some of the same concepts and ideas work in other markets as well. So, if any of this stuff interests you, please let us know. We do have our education course in this room, and we do it using live charts. So we try to make sure we explain what is going on and what's happening. All right. Again, we've talked about a blue band area here. I would be just kind of mark it as in this area here. That way, no idea where it wants to go or what it wants to do. And now we're in this is the no trade zone right in here. Again, if anybody has any questions, please feel free to ask in the chat. Uh-oh, he's awake. I saw some kind of squirrel running across. Oh, he's chasing him. Inside the house, he's chasing him. You can hear him running upstairs. Goodness. All right, we're coming down here now. Again, we already used the 52 as our first support area, so I would be mindful of that. We're probably looking at the 42 as our next good support area. Yeah, we're just kind of rotating down here a little bit. Again, we at the 42 area is our next support area. All right, market continues to downtick here a little bit. Looking at the 42 is our next support area. All right, market continues to downtick. Looking at the 42 areas are next support. Again, whenever you choose to do, just make sure you keep your stops in place. Now we got down here to 43. All right, coming down now to the 42 straight up. If you did take that, or waiting for it, I should say. Again, just work the level, keep your stops in place. That's all you could do. And we quickly pushed up to 42, come back down here. I mean, 44. And back down here a little bit. All right, again, I'm going to retest yesterday's low there. Again, make sure you keep your stops in place no matter what. All right, yesterday's low was our back up here to the 42. Again, depending on how you're scaling in, maybe we're able to adjust there a little bit. If you did get stopped out, I get it. And now we're just kind of hanging around the 42 area. And there's a nice little rotation here going off it. So it did go retest yesterday's low. Again, that was our back up to the 42 if you were trading it. And then a nice little rotation back up here. All right, nice little pop there against it again. You got to understand the volatility is still in the market, especially when we're going down to the downside, and especially when we are going to test those lows from yesterday. Obviously, I think no, that was not overnight. That was yesterday, close to being overnight. All right, now the next support level I have is down to 34. Obviously, we got down here to 36, so be a little bit careful around that 34 area. The VIX is trading up at 27, so we can see how the VIX is definitely adding to the volatility here. All right, nice rotation there against the 42. Right there, Philip. You have a good one. And definitely they went. That was the whole goal of that little move there, was go retest that low from yesterday. All right, nice rotation there off of that. Uh, we had 42, got down to 36 and change. Obviously, it took to take a little bit of heat, but the retest of the yesterday's low was the key point there. All right, rotating quickly back up here. Nice rotation there off of that our area. Obviously, it took a little bit of heat, and also understand that I did say that it's probably going to go retest the lows. That was a very vicious little move back up. Well, hopefully we're trying to keep it a little bit long there. All right, quick rotation back up here to the pivot area as well as our blue band. Very quick rotation off of that move to the downside there. They were like joking, right? All right, if you did maybe dip your toe there against our pivot off of that quick rotation, getting a nice little payoff here. Sometimes you just got to wait for it. You never thought 10 minutes ago we were going to get back up here to our pivot, but that's what happened. Amazing. Nice movement, nice volatility, going to our areas where we're focusing on. There's also our blue band as well there. So we had a couple of reasons maybe to sell it off there. Nice little trade if you did jump in. All right, we're just kind of hanging back up here at our pivot. So got neutral very fast there. If you did sell it initially, then you did okay. And then now we're just kind of coming back up here. Now we're getting definitely neutral. We could definitely, I mean, who would have thought we're going to say we're going to roll right back up, but maybe. But definitely here at our pivot, kind of neutral. I have no really good feel, especially after that last little move to the downside. They just went and retested it and came flying right back up. Wow, real quick, bounce back up again. The 72 already got tested, so we're looking at 80 on the upside. Wow, who would have just thought that's what's going on here? But like I said, we're kind of neutral as far as having any conceptual idea what is going on here, right? So we'll just patience and wait for opportunities. And if any of this stuff interests you, we'd like to know what we are doing, what our levels are, how we find them, what our backups are, and this and that. We do that in our education course. The goal of the education course is for you to be able to do this on your own, find levels on your own to understand why they would work, and then execute those trades according to your risk tolerance and understanding your risk tolerance as well. I mean, again, the like I said earlier, technical analysis we do works really well for S&Ps. Doesn't mean that it's not going to work well for other markets as well. Use it in other markets, not specifically euros, or I should say currencies. Again, I don't think currencies are honest trade, but hey, you like to trade them, so that's fine. But you need the volatility here works well. I think the volatility in some of the other markets work well, like I think oil for sure. I think maybe some of the grain markets. So as long as some ebbs and flows in the markets, and I think they would work. So again, currencies though, they got their own little thing going. Same with the bond market. I mean, I mean, the bonds used to trade great technically. We used all the stuff that we have here in the bond market, and they were great until they started going a little nutso. But even in the bond market, you could take some of the concepts in it, and they do work as well. Except the bond market has become more one-way trade when it decides to do one way and doesn't really give you ebbs and flows. But if you're on a slow day, you could probably take some of the bond market, some of the same stuff that we use in the bond market, and use them as well. They used to, like I said, I used to trade bonds obviously all the time, and they definitely used to trade well technically and gives us those opportunities. But once 2007 came around and they started doing quantitative easing and everything, that kind of blew that concept out the window. So bottom line is you have to find your markets that this stuff will work in. But they are out there. All right, we're just kind of back into this range. They went and retested the low from yesterday and then came right back into the middle of the range here, trading just a little bit above our pivot. So kind of just a little bit neutral right now. Well, I'm not even, there are a lot of people who love to trade the Forex, but by the same token, not only is the commission structure what it is, which I don't know what it is because I haven't traded it, but also the banks control that, right? I mean, the banks can make that market move in one currency, one way or the other. And same as the bond market. Bond market is not a good trade anymore because the Feds dip their toe in it so much that they control what happens there. So it's just, again, the one-sidedness of the trade, at least in S&Ps. There are some people who can probably control it on slower days, but for the most part, everybody is, there's a lot of volume here. It's a lot harder to control these markets than it is to control the currencies or the currencies or the bonds. It's a lot harder to control those than the S&Ps I'm talking about. So all right, market uptick in here. Nice rotation there off of those retested those lows and then coming all the way back up here. We tested the 72 already, so I'd be looking more at 80 right now if we do get back up there. Had a very eventful morning, that's for sure. Got plenty of opportunity here. trade. Definitely 7 or 8, depending on how aggressive you wanted to be. If you just use our levels, they hit like 4 or 3 of them. But there were definitely price action opportunities along the way. I suggested some of them. That doesn't mean that you all have to take them. We also, you have to kind of know why they're there and when to take them. And there's also when not to take them, when the risk level increases. So obviously, we've had a good number of opportunities this morning to trade. As we quickly rotate back up here to these highs, looking at the 80 area. Again, whatever you do, keep your stops in place. You're having a little rotation there in the bond market to the upside. Maybe that's helping this little push up here because the bonds have been just battered. This is a nice way of putting it. The 10-year, the yield on the 2-year is up at 3.8. So that is definitely dangerous territory. Anywhere around the 4%, especially for 10s and stuff. I haven't seen that in years. All right, again, we've had some nice opportunities. Patience is important. Next level on the upside we're looking at is up at 80. And then you have our levels above that. It's been all over the place today. So be patient and wait for opportunities. We'll get back here in a bit.